veel siin ei ole live. Nii.
Ole.
Oota. Yes, bye.
So, hello everyone. Maybe just to wait for a couple of seconds or minutes to see everyone has joined. But then again, I think I can start talking already. So hello, my name is Stavi, and I am one of the co-founders at BitOfProperty. Today we are in our office in Tallinn, and I think it was a couple of weeks back, or maybe less, that our CEO decided to do the first webinar where he talked a little bit about our company in general, talked about our mission, our vision, how we structure everything, talked about our partnerships. I think this video is also available on our channel. You can definitely take a look at that if you haven't already. So, but this time we decided to do a little more in more detail webinar about the project that we have live at the moment. So, so that you would get the feel like what is it exactly that has been offering, how this has been structured, and so on. But before I go to that I will just briefly talk a little bit about myself. So I have a civil engineering background, and everything professionally that I have been doing so far has been somehow related to real estate, which means that I started off at construction management. I was in a construction management team. Then I moved on to property management, which is like the ongoing management of different properties, like commercial properties mostly. Then I moved on to portfolio management, which was in one of the larger companies in Estonia, where they had a huge real estate portfolio that needed to be managed somehow. So that was my responsibility there. So and now BitOfProperty, where again we are dealing with real estate, this time on the investment side. And so yeah, this is everything that I've been doing professionally so far has been somehow related to real estate. But I think it's okay to just dive into the project that we have. I'm gonna screen share. Just to the way we're decided to structure this is that I'm gonna walk through the investment guide that we have, which is also available in our platform. You can download it from there as well. But just to structure it better, I'm gonna just screen share this and show you guys. So I hope you can see it. So yeah, so this is the investment guide that we do for every project that we are putting live on the platform, which is basically just a PDF document that you can download and use it. Like if you don't have access to the platform for some reason, then you can just look at the information or share with your friends or send to your friends or someone who would you like to take a look at the project. So yeah, this project that we have is the third one. This is called the DepotHouse, and the first deal that we did was also a new development. The second one, which was the Kukla's apartments, which was BitOfProperty, was an existing property. So now again, the third one is a new development. What makes it different from the last ones is that the first ones were we only showed you or gave an opportunity to invest in one unit, but this project consists of 3 units. So the project itself is as a fully new renovation. They wanted to do less. It was an existing building. They decided to demolish it, but they decided to basically take it down to the core and only leave the structural elements, and then basically do everything from scratch. So the developers are developing 73 guest apartments there, and we have booked 3 of those. So So this is the reason why we have taken 3 this time, is that based on the first 2 projects, we received feedback that maybe we should, the investors told us that maybe you should try to give access to maybe 1 project, but the project consists of many units to bring down the vacancy risk, for example. And I thought that this would be a good opportunity to do so, because we have great communication with the developer, and they said, okay, of course they are willing to book more than 1 unit for us. So below you can see that the investment has been open from the 30th of August, and it ends this month. So 2-month period we are raising funds for this project. So I think it also makes sense to dive into the advantages of this project, and what makes it a good investment, and what are the benefits of investing in this property. Well, the first one is competitive rental yield, which is definitely the case, because when you look at historically in Tallinn, we see that for residential units, you see that mostly you get like maybe 4 to 6% rental returns, and this is a 7% project, so it makes it like an upper level rental return in terms of the average that we have in Tallinn or in Estonia in general. So the second thing, which is also very important to note, is that the rental income is guaranteed for the first 24 months. So why we need to emphasize the word first is that we have made an agreement with the developer that they will be the tenants, they will stay as that we have a tenancy agreement with them for the first 24 months, and that we have a fixed rate that will make the rental return 7%. If this period ends, we now have the decision time that if both parties agree, we can extend the agreement. If not, then we can just start looking for a new tenant ourselves, and just to extend the tenancy agreement that way. Another important thing is that the rental income distributions begin immediately after the end of the funding campaign. What that means is that when we take, for example, the first project that we did, we had the funding campaign in November, and 6 months later, the apartment was handed over to us, which means that for more than 6 months, we didn't have any rental income. We just waited for the apartment to be ready, and so that we can start renting it out. But this time, we have also agreement with the developer that if we successfully reach the target of the 100% of the target amount that we have, then they will already start distributing rental income to our investors. Now, this next one, real estate backed investment. To this point, I will dive into later on when I talk about the structure and how it's actually real estate backed. But what it means is that basically your investment is protected by the real life asset that is the apartment, or 3 apartments in this case. Strong local rental market. This is also the case because, and also I'm going to mention this later on as well, which is that we have a strong migration into Tallinn. We have every year we got new people moving in. So there are many specialists, foreign students, people moving to Tallinn from other cities, that we see that people are looking for the rental apartments, and the demand has been increasing. Consistent capital appreciation, again, we'll mention later on as well, but this has been in Tallinn, in Estonia overall, we have seen for the past, I think it's more than 5 years, 5 or 6 years, we've seen a steady growth of real estate asset values. And lastly, which has to be mentioned as an advantage, is that for the investors, it's an extremely passive investment, because everything has been done for them, for you. It's fully furnished. It's fully managed. There's no choices to be made. Everything has been chosen to suit the rental market or to suit the concept of rental cash flow project or cash flow unit that we have here. So on the right, we can see that the minimum investment ticket is 50 euros. For the first two projects, we had 500. This time, we decided to lower this to 50. This is just to get to know our investors better, to figure out what exactly are they looking for, who exactly is our investor. Are there many who want to maybe start investing, like beginners who want to just pitch in like 100 euros, 200 euros, or even 50 euros as the minimum ticket. So this is something we're just getting to know you and getting to know our customer. And also the returns I'm gonna talk about a little bit later when we have the calculation breakdown. So the building itself, as I mentioned, this is a 73 studio apartment. I will show you briefly how the units are looking. As you can see, all the units are basically identical. They are all around 20 square meters, and there's no difference in how they look, for example, because it's the logic behind the developer is that it's easier, for example, to plan this development so that every unit is basically identical. And since they are also furnishing this for the owners, for the property owners or the unit owners, then it's easier for them to just plan out the whole furniture, the integrated furniture like kitchens and everything. So it's easier for them, it's easier for investors, and it's actually easier for everyone. It just makes sense. So this is the first floor, and this is the second floor. It's really simple for us. We have booked units number 65. We also have 51, and also on the first floor we have unit number 9. So this is just a selection that we decided to do. It looked like we definitely wanted 2 apartments on the second floor, and this is what we agreed with the developer. And to look at the apartment itself, we have visuals on the platform as well. You can just look at the images that we have there. As I said, the average room size or the apartment size is 20 square meters. And basically looks like this. You have this simple plan where you have all the essentials. You have your kitchen, you have everything you need for your everyday life, basically, you have there. So yeah, this is like just to briefly giving you an overview how the apartments will look like and how the concept looks like. So yeah, about the developer. Just to mention them, that who is behind this project and what is their experience. They established their company in 2014, and in the beginning they mostly did like renovations of old or historical buildings, but they only operated in Tallinn like they do at the moment. They haven't gone out of the capital of Estonia, so they did this so well that in 2016, one of their buildings was actually chosen as the best restored building in historical area. So they definitely know what they're doing. This is definitely not their first project, and they're also, I think it was more than 25 units from this building they're planning to keep for their own portfolio, because they are also active investors in rental properties. So this is also a good sign for us and for our investors that the developer is basically building for themselves. So it shows that they're definitely not cutting corners on quality and functionality and everything, because it's their own money at stake as well. So yeah, let's talk about the financial projections in more detail maybe yeah, what we usually do is we show 3 scenarios. We always show the weak scenario, neutral, and good scenario. Why we do this is basically just to inform investors that we never know what's coming in the future. We can base our opinions. We can take a look what has happened historically. What are the current numbers? but we definitely cannot say for a fact that this is definitely going to happen. So just to put these scenarios into numbers, we always show 3 scenarios. So the first thing is also always the property value. So the property value is, as you can see, it's for the 3 units is 2,500. So, and also the furnishing is included in the price, because that's the approach of the developer. They want to do this, that everything is included and it's easier for everyone. Investment setup costs. This includes, this is also available on our platform. You can always look at the breakdown, what is included in the setup cost, but usually it's we open up the special purpose vehicle, which is a legal entity that will make the purchase of these 3 units. So we opening up that cost regarding that. Then we have notary fees, we have stamp duty fees. So we also have a security agent fee that I'm also going to mention later on. So everything is included in this package, so that we can, so basically like a structure fee. So everything is included in that lump sum. So investment term, 3 years. Also going to mention later on, talk about how the exit has been planned and overall the whole period. So this makes the total investment amount 204,000. And also, of course, this is the same for all the scenarios. Now the scenarios change a bit. For example, vacancy. We haven't projected vacancy rates for the first 2 years because we have a strong agreement with the developer for the first 24 months. But starting from the 3rd year, if we have to take over or the tenancy agreement ends, there might be something there might be some vacancy. We have been really conservative with the numbers here. The weak scenario is that the 20% is the vacancy on the 3rd year, which is highly unlikely. But then again, we decided to show these worst case numbers. So the neutral scenario is 10%, and good scenario is we don't have any vacancy. So then we do the math, basically look at the rental income for 3 years, and also the next is our administration fee or a management fee that we take to just basically manage the whole thing for you, for the investors. And we usually do 10%, but since there's a lot of things that has been already been done by the developer, we decided to lower this for the investors. Instead of 10, we're taking 8. So this is something that we just to cover on our everyday cost that we might have during the whole period, and doing everything like monthly distributions and everything included, including this. So insurance, annual costs, extremely important thing to note that all our projects that we do are definitely insured, just to add another protection layer to our investors. If something were to happen to, I don't know, inside the apartment with neighboring apartments, so that might affect our units. So this is just to protect from that. So then we get the estimated rental income for the for the 3 years before taxes, and then you can see like we have projections of value increase. Weak scenarios that the value decreases, something happens to the market, for example, it just goes down. Neutral is that the price level stays the same, and good is like 3% increase. The numbers 3 and -3 are also quite conservative when you look at the historical numbers or the numbers that we actually have at the moment. But in good sense, we thought that we should show or should project like conservative numbers. And then you get the result, and you can see that the weak scenario, even if the value decreases, you still get a return on your investment, which is 8.9%. And for the good scenario, when your value actually increases as well, you get 27%. So this is basically the simple breakdown of the financial projections. So let's see. So location. I can talk about a little bit more about the location, where exactly it is in Tallinn. So this is basically the like an overall map of Tallinn. What I've been, what is marked down with the red line is basically the midtown section of Tallinn. So, and the sub-district called Kitseküla, where the DepotHouse is located, is actually here. So we can see that this is a sub-district of Midtown. And what makes this location extremely good is the connection and all the transportation options that tenants have there. You can take the train. The train station is really close. You can take the bus. There are bike lanes close by. You can take every imaginable public transport there is, and it's extremely close. For more modern people or tenants, there's also an option inside the premise. There's always also an option to fill up your batteries for your electrical, I don't know, bicycles, cars, whatever. So this is for like a more modern tenant, for example. So yeah, the location is, so Kitseküla, for the sub-district where it is developing really nicely right now. There are a lot of new developments there. So it's and it's really close to the very center of Tallinn. So it's good for tenants maybe who are going to universities close by or working close by. It's really well connected. So so the market overview. For this, I'm going to show a couple of graphs what I think are quite important. The first one would be the property value. As I mentioned in the financial projections, that we have been showing or projecting 3% or increase for the good scenario. For the past 7 years, it's actually been 8.8% increase, and last year it has been 5.5. So starting from 2015, you can see that the growth has been quite steady. So yeah, we decided not to show numbers higher than 5.5, just to be a little bit more conservative. And rental prices, as you can see, have been going up maybe a little bit more rapidly. But in our projections, we actually haven't included the rise of rental prices for the third year. But this is always also an option that we can, if we plan to do a new tenancy agreement on the third year, there's also a potential to get higher returns, higher monthly returns if there's an opportunity to just if the market prices have been rising steadily. And one other thing is to mention about the market which is important, is the number of inhabitants in Tallinn that I briefly mentioned. Also, basically, as you can see, that every year we get new people coming in, so they definitely need a place to stay. They definitely are looking for maybe their first homes, maybe for temporary rentals. And what we also believe that is that the one-bedroom apartments, the smaller micro apartments, which is the term that's been used quite often recently. This is when the market, for example, collapses or takes a downturn. These are the apartments that people are starting to look at when the worst case scenario occurs, because these are the most affordable ones. And these are not, by all means, these are not luxury units or luxury apartments, but these are affordable even if the worst case scenario strikes and people are just looking for the place to live. So I think the one bedroom or smaller 1 or 2 bedroom apartments are a good way to go just to protect yourself from the rapid downturn of the market. So a little bit about the timeline and exit strategy. I mentioned the periods already before. For example, the crowd investing is from the end of August up to the end of this month. So we have about 20 days left in this crowdfunding period. And the second step would be when we reach the 100% of the target, would be that we acquire the apartments. And as I mentioned, this will also be the beginning of rental distribution. It doesn't matter that we haven't the apartments have not been handed over to us by the developer yet, but they still decided they will start distributing rental income to us so that we can pay to our investors. So at the end of this year, the developer has been planning to hand over the fully furnished apartments to us. So before we take over the apartment, we will also do a technical inspection on our own. Since our team members have civil engineering background, we have construction background. We know what are the what to look for, where to, and we will definitely make like a report of our inspections right before when we do the inspection, and we will definitely not take over the apartment until every little detail has been fixed by the developer. So this is planned at the end of this year, and then the whole period starts, and then this is planned to be 3 years. And the sale period usually we start 6 months before the actual term ends, so that we get time to prepare the sale, just to prepare everything, and so that we don't have to rush the sale. What investors have been asking from us quite often is that what happens if the market takes a downturn? Are you basically selling at a loss? So this we have thought about a lot, and what we have decided to structure this is that we don't force losses on our investors. So what we have so that's why we have the right to, in case the market takes a downturn, we have the right to extend the period, for example, 1 year. So because we don't want to sell at a loss. This is not our aim here. And we are also building a secondary market or the marketplace on our platform, so that even if we don't liquidate the asset, investors still have the opportunity to sell their share to another investor. So so that if there's a need for an investor to exit, so that he still has an option, even though if we plan not to liquidate the asset. So overall investment info, everything we actually covered. The period, the investment, 3 years, distribution will be monthly. I think I didn't mention this before, but the distribution will be monthly. And the capital gain distribution definitely after the property sale. Now, to the part I think we get questions the most is the structure and the security. So for this, I'm going to show you like a small graph that I prepared, is just to give you an overview how the legal structure has been worked out, how we structured the deals, and how are the investors protected, and what are the layers of protection, what is the information that we provide to the investors. So since our goal is to be as transparent as possible with all the numbers, with all the fees, with everything, so let's assume here that the target for this project has already been reached, 100%, and the next step would be that we would have to acquire the properties. So how do we do this? So we have a company, BitOfProperty OU, which is a platform operator here in Estonia. So the first step that we do is basically we will open up the special purpose vehicle, which is a legal entity. It's a company that will in the end acquire the DepotHouse units that we raised money for. So the platform operator will remain the 100% shareholder of this special purpose vehicle. And for the investors, we will send, as proof of ownership, we will send them extract from the e-business register, which is an open register. Everyone has access to this, and we will just provide an extract from this, which will show that, yes, this platform operator owns this company. So the next step is that the capital that were raised from the pool of investors will be sent to will be sent to the special purpose vehicles account just to make the purchase. So every investor has pitched in different amounts. So how do they know? How do we know how many? What is their share ownership, and how do we prove them, or how do they know that how much do they own? So for this, the proof of ownerships, we have two documents. We have share certificate, which we provide to all the investors, and we also have the smart contract certificate. So the smart contract certificate is connected to the database or blockchain that I'm sure Carl, our CEO, mentioned in the first webinar, or discussed in the first webinar as well. So this is like a third-party database. Essentially, like, we don't control this database, but all the investments that investors have made are registered on there. So the smart contract certificate basically explains how you can access this database, how you can look at this, and how you can see what time did you make the investment and where did it go. So this is also like something that we provide to the investors as proof. So the third step would be the actual purchase of the property. So this will be made between the property owner, in this case we have the developer, and us, and our SPV BOP3 OU. So again, to prove the transaction to our investors, we will send an extract from eLand Register where it's clearly shown that this given property, or these given 3 units, are owned by this special purpose vehicle, BOP3 OU. And the final layer, which will be the security layer, is the security agent. So this structure as a security agent structure is to protect the investor's investment, and this is where the asset-backed term comes from. So the security agent is a company controlled by a law firm. So basically, again, third party from us. We don't control this company. This is a law firm here in Estonia, and their goal is to protect the investment in a form of a mortgage. So they hold the mortgage, and if something happens, like the worst case scenario, something happens to a bit of property, and we get removed from the picture. So now the security agent will take over, and their sole purpose is to protect the investors that were in that have invested in that property. They all have this information. They have these share certificates. They know exactly who is behind the investment size, who invested 1,000, who invested 500. So they all know so the security agent knows the share ownership. So their goal is to, if something happens, the worst case scenario, they will take over the SPV, and they will sell the units, and they will distribute the funds back to the investors. So this has been asked a lot from us, and that's why we decided to add this layer to our structure. And also this is the reason why we wanted to add like a third party layer, so that we don't control this, but the investors know that it's there, and it's controlled by other company whose sole purpose is to protect the investors' money. So this is the breakdown of how we structure it. This is the way that we structure all the deals. This is the structure that we did for the first deals as well. This structure just makes it easier for the investors to come in, to get out. So it's just a simple structure, but still protected when you look at from the point of view of the investors. And also risks, of course. All the investments come with a risk, and this is something that this information we have to provide to the investors. And also, I think it's always a good thing to talk about risks. There's always a vacancy risk, for example. Market fluctuates up and down, up and down. You never know what's going to happen. You might assume, but you never know for sure. So this is something that we try to communicate to our investors, and this information is also available on our platform. You can see every type of risk that there might be, and it's up to the investor to decide that is this something that they want to continue or not. I think this is the full breakdown of I'm just gonna run through if there was something that I did not mention, but I think I talked about everything that and let me see if I can. I will stop the screen share. Let's see. Yeah, I stopped the screen share. And yeah, I hope I'm gonna look for if I can see the questions, if there are any. I think I hope I answered all the questions that you might have had. I definitely touched the points that we have been asked the most. So I hope this helped. Even if this little webinar or overview didn't help you as much, we're still open for all the questions you might have. Or you can always send us an email, call us, or meet up at our office, or meet up, I don't know, grab a coffee somewhere. So we're always here to answer your questions. So basically, yeah, I think I'm gonna wrap this up. It's also available. This webinar will also be available on our YouTube channel next to the one that our CEO did before. So yeah, thank you for joining us, and I think see you at the next webinar, if not sooner. Bye.